They're set to travel in the US without masks, but could Joe Biden get in the way? The smart money says the RBA will raise rates in June, but should we be worried that Dr. Phil will get rate rise happy? And what could kickstart the stock market rally for the rest of the year? I'm Peter Switzer, and Paul Rickard's not here, but we're mad about money. Yes, Paul Rickard's away again, off on very important board business, of course. But let's go to the big story of this morning. Masks are no longer going to be required on US aeroplanes, thanks to the ruling of a federal court judge. Now, travel stocks immediately went up on the idea that a hell of a lot of people don't like traveling with masks. Anyone who's done that would know it's a pretty tough exercise, even between Melbourne and Sydney. Try going from Sydney to London with a mask on. That would be a big challenge. And of course, some people won't travel because of that. And ultimately, travel stock prices have been affected. Interestingly, with the decision from this federal ruling of a judge in the US that masks would be taken away, travel stock prices went up. But Joe Biden apparently is going to move against it, doesn't like the idea. Probably worried that COVID's still pretty serious in the US. It's going to be a very interesting battle between Joe and the judiciary. And of course, the travel industry. Let's go to the second big story. And now it looks like Dr. Phil Lowe, of course, of the Reserve Bank, is giving hints out there that maybe the Reserve Bank will raise interest rates in June. Now, remember, the call from Dr. Phil was it wouldn't happen until 2024. He's kind of been backing away from that. And we thought, okay, the first rise will be in 2022 sometime, maybe later in the year. But now he's apparently getting a little bit worried about inflation. Tom Juzovic in The Australian wrote a pretty good story today talking about how hints are going out there. The banking economists are now thinking that the first interest rate rise, which they thought was going to be in August, will now be in June. The board minutes came out yesterday from the April 5 meeting of the Reserve Bank. Then there's kind of hints there as well that they're getting worried about the underlying inflation rate. So the bottom line is this. Next week, we get the Consumer Price Index on April 27. If the underlying inflation rate is well and truly in the 2 to 3% band, particularly on the high side towards 3%, then the agitation and speculation that the Reserve Bank will raise interest rates in June will be very, very likely. Now, by the way, what will they raise by? Well, they're currently at 0.1%. It's likely they'll raise by 0.15%, taking them to 0.25, and then they'll raise by 0.25 or by 0.5% if they really think they're worried about inflation in Australia. I've got a funny feeling that if the inflation number isn't as bad as expected, the RBA could hold fire, but they're going to eventually start raising interest rates in Australia just to make people get a little bit toey about raising prices, and also to get on top of the inflation trend that is actually built in. But the critically important point is, and I think this is a fair point, if he moves earlier than I expected, say in June, it could be a case of a stitch in time will save 9. And there are some aggressive economists out there believing that interest rates could rise 8 or 9 times over the course of the upcoming year. So getting in early may well be an advantage, because I do think inflation in the second half of this year will start coming off the boil. And I'll give reasons for that later. If all that works in together, maybe all these big calls of 5 or 6 interest rate rises or even more could be reduced because inflation is coming down off the boil. By the way, here's a good question for you. When was the last time we had an interest rate rise here in Australia from the Reserve Bank? Try November 2010. Extraordinary. Over 11 years ago since we had the last interest rate rise from the RBA. Let's go to the final issue. And what could kickstart the stock market rally for the rest of the year? Well, here's the interesting point. This came from the CNBC website overnight. One of the leading commentators was quoted after looking at the earnings season in the US, which is coming in better than expected at this point in time. His quote was, "We've got great earnings season so far." And today the market is focusing on that. They're focusing on the VIX that's coming down. Now, the VIX is the fear factor index. It's coming down. And of course, oil prices define. Oil prices helps the inflationary story. And that is the bottom line that could really drive stocks higher in the second half. You've got to pray for two things. One, peace is settled in the Ukraine. Secondly, that China gets on top of its coronavirus problems and stops locking down its population, affecting the supply chain and keeping prices high. If Ukraine goes into a settlement of some kind, some sort of kind of agreement, oil prices come down. If China starts producing again, supply chain costs from the lockout and the fact that microchips aren't being made and parts for cars and washing machines aren't being made, all of these things can drive inflation down. And once there's a belief sometime this year that inflation is on the way down, all those expectations about lots of interest rate rises will be toned down. And that will be a great stimulus for the stock market here and right around the world. So if you're going to pray for something, pray for peace in the Ukraine and pray that China gets on top of its coronavirus problems and stops locking up its people. I'm Peter Switzer, and I'm mad about money.